Hey everyone, welcome back to another episode of Market Monocle. This is episode 4, and today I'll be presenting you with the top 20 US stocks to buy according to research analysts at Wall Street investment banks. I crunched over 3,000 stocks and ended up with 5 lists grouped by market cap that sell side analysts think have the highest share price upside. I've recently been getting a lot of messages from you guys on what stocks to buy given that the US indices are at all-time highs. So I thought it'd be interesting to show you what the brokers think. Even though this is a quantitative exercise, I can assure you that you will not find the same list anywhere on the web, as I have proprietary filters that take away potentially poor quality stocks, which I'll explain later on. Before we begin, it's important to note that the stocks presented in this video are not my stock recommendations, as I have not done enough fundamental research on most of the stocks presented here. I'll first go over how I crunched the numbers. The data in this episode are based on stock prices as of April 26, after market closed, and are sourced from Bloomberg, Reuters, and Yahoo Finance data. The data set of over 3,000 stocks are then grouped by market cap: micro, small, mid, large, and mega. The market cap perimeters used are my own, which will be shown on the tables later on. There are 3 important filters that I've done. First, I've only included stocks with coverage from 4 or more brokers. This is to reduce the variance and potential biases from a small sample size of analysts. Having at least some brokers is usually a good thing for stocks. It can potentially indicate that a stock is shareholder friendly, have an interesting investment thesis, or have at least some following from investors. Some coverage from brokers could also filter out the stocks with sufficient liquidity, as brokers won't bother covering stocks that cannot be traded. 2. I have not included any stocks in the healthcare sector, including biotech, pharma, and others. Now, this is a personal preference. If I included this, the small and micro caps will be filled with biotech plays. The issue with these is that you have to be very knowledgeable in the sector, or else, in my opinion, it is just gambling. I apologize to my viewers here that are experts at healthcare, but I assume 99% of my viewers do not have the sufficient knowledge to invest in them anyways. Let me know in the comments section below if you'd want me to include these next time. 3. I've taken out all the stocks that have had a broker lower its target price within the last 30 days. This is actually a pretty important filter, and I have not seen many people incorporate this. This reduces the chance of catching a stock with deteriorating fundamentals or a recent news that is negative to its outlook. Sell-side analysts usually reduce target price after an event or news that change their estimates or outlook of the company. A cut in the target price usually, but not always, means that fundamentals have deteriorated in some shape or form. Here, I'll explain how to read the results table. The number of brokers indicate the number of research analysts covering the stock. Usually, the larger the market cap, the more brokers would cover the stock. However, fewer numbers of brokers does not necessarily mean the stock is inferior. It could just mean that they were recently listed, or they're just a smaller microcap with fewer brokers willing to spend the resources to cover the stock. Market cap is self-explanatory. Note that the micro and small cap are presented in USD millions, whereas the larger caps are in billions. Current price is as of April 26 market close. The average target is the average target price of all the Wall Street analysts covering the stock. Upside is the percentage difference between the two. Percentage buys is the number of buy recommendations relative to the numbers of total ratings on the stock. This could potentially indicate the conviction level of analysts. The target trend indicates how much the average Wall Street target price have moved by in the last 30 days. NC stands for no change, and it means no analysts have updated their target price in the last 30 days. The more pluses there are, the bigger percentage increase in the target price in the last 30 days, which could be a bullish signal. Lastly, the rating trend is similar to the target trend. It indicates the directional trend of the average Wall Street rating on the stock in the last 30 days. For instance, if more analysts downgraded the stock in the last 30 days than those who upgraded, this would make the average rating drop, and it will be indicated by a negative sign. If more analysts have upgraded the stock than downgraded, then there will be a positive sign. NC again means no change. Before we get to the results, a few caveats in using quantitative screens. First, research analysts are often wrong, and target prices should be taken with a grain of salt. If a stock is not well covered, its numbers or ratings can be skewed or heavily biased. But fewer brokers could also result in the stock being more under the radar, which increases the chance of mispricing. One of the biggest caveats when comparing target price upsides between stocks is that it does not show the level of risk in each stock. You should expect that a microcap with a 200% upside have much higher risk than a megacap with only 10% upside. The quantitative screening also does not provide any form of fundamental analysis. Now lastly, my data sources or number crunching could just simply be wrong. I'll be presenting my findings from megacaps first, and then work my way towards microcaps. Feel free to pause the video on each page to examine the list carefully. This page features the top 20 megacap stocks with market caps of over 100 billion US dollars each, that analysts believe have the highest upside. Again, as a reminder, these are based on the filters that I explained earlier on. On the top is Uber, which according to 42 brokers have an average 25% upside to the stock. This list is for large caps, which are stocks that have market caps between 10 to 100 billion US dollars. I just want to point out that the top two stocks on this list are both recent IPOs. Opendoor went public through a SPAC only in December 2020, while Coinbase went public only on April 14th. Hence the limited number of brokers relative to their size. This list is for mid caps, which I define as stocks that have market caps between 3 to 10 billion US dollars. Interestingly, Fubo TV is on the top, and it is highly popular on Wall Street bets and social media. It IPO'd on the NYSE in October 2020. This is the list for small caps, which are defined as stocks that have market caps between 500 million to 3 billion US dollars. Lastly, this is the page for microcaps, which all have market caps of less than 500 million US dollars. Notice that the smaller microcaps we go, the higher the potential upside, which is usually proportionate to the risk associated with it. We also get more NCs on the target and rating trend columns, since the brokers who cover the stock update them much less frequently. To sum up the key points of this episode, stocks presented here could serve as a good starting point for further fundamental due diligence. It is important to remember that stocks higher up the table does not necessarily mean it is the best stock in terms of risk reward. Metrics should be considered holistically. Tech stocks are still clearly well represented on my list, which indicated still a favored sector. The lists also show that higher risk stocks, or those with smaller market caps, should be coupled with higher rewards. For the larger cap names, analysts have been pushing their target prices higher in the last 30 days, in line with the broader market trend. Lastly, let me know in the comments section below which stocks you guys like or would like me to cover in future videos. So that's it from me, guys. Thank you for watching. If you like this video, all I ask is that you like the video, leave a comment below, and hit the subscribe button. Thanks, and I'll see you in the next one.